The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and thank you for joining us today for a webinar on winding down and voluntary liquidation of companies. In today's webinar, we shall discuss some broad areas that would essentially cover the following: voluntary liquidation in the advent of the Insolvency Code, pre-closure critical issues which the management needs to consider, procedural aspects of liquidation, role of the liquidator, comparison between voluntary liquidation under the Insolvency Code and fast-track exit options available with the company, and discussion on practical case studies that have been handled by us. Joining the discussion today is Ajay Abad, Associate Director from Nexdigm. Ajay is an Indian CPA and a company secretary with more than 12 years of experience in corporate restructuring, mergers and acquisitions, and joint venture advisory. He actively supports clients with the process and designing the strategy for winding down of their operations. Along with closure of the companies, Ajay also has extensive experience in closures of representative offices in India, including branch offices, liaison offices, and project offices. Before we begin, please note that all our listeners are in listen-only mode. If you have any questions during the presentation, please share them with us through the questions box available on the control panel on the right-hand side of your screen, and we will address your queries towards the end of the webinar. We are happy to host today's webinar for all our listeners. Without any further delay, we shall start. Over to you, Ajay.
Hello everyone, good evening, good afternoon to my European and good morning to you, my US friends. Thanks Jugal for the introduction. I hope you all are doing good and safe. COVID-19 pandemic has thrown us in a difficult situation, and across the globe, business are struggling for the survival. Almost all the business houses are taking austerity measures such as deferment of or reduction of paychecks, stopping new developmental projects, resizing workforce, and terminating hiring and expansion plans. These are some of the measures which everybody is taking to deal with the situation. Ultimate objective is to conserve the cash and spend judiciously to prepare for the future uncertainties. The topic for the webinar today is voluntary winding up or wind down of the operation in India. Topic is more relevant in these times as it helps companies to rationalize their offshore presence, also restrict further investment in loss-making businesses, and save money which they may currently spending on its compliances and keeping it alive. So without going into the what currently happening in this side, I would like to start the straightforward presentation on the topic which we have dealing it today. So in the Indian context, there are two options, broad level options for the closure of business in India. And when we are seeing the closure of business in India, we are talking about only the solvent companies. Solvent company necessarily means that companies who have the sufficient cash or the assets available to discharge its liabilities towards its creditors and the employees. So this is our prima facie base for the discussion, and on this basic discussion we are discussing this topic. So as I mentioned that there are two options for the closure of companies in India. First option is the voluntary liquidation under Insolvency and Bankruptcy Code. Insolvency and Bankruptcy Code has been introduced by the Indian government in late December 2016, and provisions of the voluntary liquidation was in force from 1st April 2017. So you can see that it's a relatively new provisions, 2.5 years so far. However, the overall acceptance to this option is very good across India. And the second option, which is the fast track exit, also known as deregistration process. In different countries, it can be treated as it is known as deregistration process. So we are using the same terminology. This fast track exit comes under the Indian Companies Act 2013. So these two options broadly available to businesses to close or to choose from out of these two options. I would say that these two options are completely different and needs to be strategically decide on once the objective is clear and the basis the facts of the companies. So why companies wants to close down, or what is the reasons, different reasons for the closure? As you may be aware that we have seen that there are multiple global acquisitions happening across the globe. And since the global acquisition, pursuant to the global acquisition, there are multiple entities are getting acquired, and in similar, in one region, there are multiple entities for the same group. And a lot of multinational companies prefer to have the lean structures in the one jurisdictions, and they want to boil down to one entity instead of continuing compliance with the other or multiple entities. So that is the one of the reason that a lot of companies decides to close down their companies. During last couple of years, India, and today also India, is the best investment destination from the foreign direct investment perspective. So during that processes, a lot of companies come to India, but every business is not successful in India, based on their strategies, based on their products, based on their demands, different reasons, but every business is not successful in India. So there are, during the last couple of years, there are a lot of pile up of the companies has happened. The third category of the companies are the companies who have already finished or completed their projects, such as companies who have come for the large infrastructure projects, companies who have come for the initial days of the oil and gas segments, companies who have set up during the IT boom in India in 2000, in the year 2000. So these are now the objective and all the project is complete. Now they wanted to close down their businesses. Next reason for the closure is non-commencement of businesses and change in plans. It happens oftenly. We have seen that we set up the entities for companies, and then they decide to close down immediately after the incorporations. And the last but not the least, that the business restructuring, which includes the hive off of the core businesses, internal business transfer, and the business uncertainties like COVID-19. So these are the couple of reasons due to which the companies generally decide to close down in India. And while deciding, and based on the objective, as I mentioned earlier, that we need to decide that which option is suitable. Both the option is different, having the different characteristics and the objective for the closure. So let's get into let's understand the different what are the key merits and the demerits of the each of the option. The first, let's discuss on the eligibility conditions. Fast track exit is applicable, generally applies to the non-operational companies. Why? Because it says that the one of the important condition, eligibility condition for the opting for the fast track exit is the no business activity during last 2 years. So considering this, if any business having the history of the last 2 years and they are operational, this option, even though it's the fastest or the fastest option or the cheapest option, this option you cannot opt for. The second demerit under this option is that you should have the nil balance sheet before you apply to the register of company for the fast track exit. So this is the negative point of it. With the voluntary winding up, if you can say that the company is only needs to be, the eligibility condition is that the company needs to be solvent. It means that it has a sufficient asset to discharge its liability, and the other eligibility criteria is that there is no intent to defraud anyone by closing down the entity. So this is the important eligibility condition under the voluntary winding up. Let's go to the director's liabilities under both the options, or director's requirement under the FT, that director needs to furnish the indemnity bond. Indemnity bond per se mentions that even if after after dissolution under the fast track exit, even if there is any liability, that director will indemnify to that person. So that is the liability which one need to give the indemnity bond. It means that liability of the person is continued after the FTE. And this is one of the most important difference between the winding up or voluntary liquidation and the fast track exit from the director's perspective. Because in the voluntary liquidation, the liability of the director is not continuing post dissolution of the company. Under the voluntary liquidation process, director need to give the declaration of solvency, in the form of declaration of solvency. What is the meaning of the declaration solvency? It essentially means that they have made full inquiry of the affairs of the company, and they have formed an opinion that either their company has no debt or that it will be able to pay its debt in full from the proceeds of the assets to be sold in the liquidation. And the second part of the declaration of solvency is that company is not being liquidated to defraud any person. So and one of the advantage of this option to the directors, that liability do not continue once the company is liquidated under the voluntary liquidation. The third criteria where we said that how to initiate the process. For initiating the fast track exit process, we need to clean the financials and the surrender of the registrations to avoid the multiple liabilities due to non-compliances. The second option, the second thing which we need to do is that in case there is a surplus funds available in the company, then fast track exit, we cannot opt for fast track exit, because the separate process needs to be implemented to repatriate the surplus funds from the company. The third important point is that before we initiate the process, we need to close the bank account to initiate the process. So this is the important criteria. It means that once we clean up the balance sheet, once we repatriate the funds, once we close down the bank account, then only we would be in a position to initiate the process under the or file the application for the FTE. Under the voluntary liquidation process, the voluntary liquidation process, it can initiate immediately. So if today you decide, then tomorrow you can initiate the process of the voluntary liquidation. It's as fast as that. Surplus funds can be repatriated during the process of the voluntary liquidation. And one of the, I would not say it's a demerit, but we need to appoint the liquidator to run the process. It's a private process which needs to be run by the third party liquidator. In terms of timelines and authorities, FT is also a private process which takes 5 to 6 months to complete the entire process. One need to apply to the register of company for approval its application under the FTE. Once you file the application with register of company, your work is per se over. However, the dissolution is not complete by that time, because generally register of company take a little more time to publish the list of the companies which are undergoing under the FTE on the official gazette, and then only the companies are generally is getting dissolved under the FTE scheme. However, our experience in the voluntary liquidation says that it takes 10 to 12 months. In 10 to 12 months, we consider from initiation of the process till filing of the final application to the National Company Law Tribunal. So National Company Law Tribunal is the adjudicating authority for the voluntary liquidation process. So these are the two broad basic differences or comparative analysis of these two options. Specifically, the different objective it's set or it's introduced for the separate objectives, and the risk associated with each option and the timeline associated with each option is completely different in overall closure process. So let's go through the next slide, where we will discuss the more detail on the voluntary liquidation. Fast track exit is definitely a lot of companies are taking that option, but since foreign companies and the directors are not very comfortable to take the liabilities post dissolution, they generally prefer to have the voluntary liquidation as a best option for their option for the closure of entities. So what is let's understand the voluntary liquidation framework in a broader sense. First of all, that Insolvency and Bankruptcy Board of India is the regulatory body which regulates the processes, regulations under the code or Insolvency Bankruptcy Code. The code prescribed the specific timelines to speed up the process. The code provides for specific and the stringent timelines for each of the actions, be it stakeholders, directors, or the liquidator. We will discuss this detail when we will go through the process of voluntary winding up in detail. The second important characteristic of this framework is that only eligible licensed insolvency professionals are supposed to be appointed as a liquidator for the liquidation of the company. As per the code, only licensed professional can act as a liquidator, which ensures speedy closure in the most appropriate way. The licensed professional is expected to be equipped with the provision of the code to complete winding up on the timely manner. The next important characteristic of the framework is that it's a completely privately driven process with least external involvements. So when we say that least external involvement, it means that there is no government interference during the process. Under the old regime, there were multiple government agencies were involved along with the company liquidator, like official liquidator and then the high court. However, the new process or the new code envisaged the need of an R, which requires that the responsibility is completely given in the hands of the liquidator, who is the licensed by the Insolvency and Bankruptcy Code of India, and that person need to run the process, liquidate the business of the company, and then file the final application to the National Company Law Tribunal for the dissolution. The code elaborative and disclosures and transparency in the liquidation process. So code has given the clear-cut directions and the clear-cut disclosures for the entire process. It is well defined powers, duties, and the responsibility of the liquidator. So no party under the situation that what is the next, and where there is no uncertainties. All the rights, powers, duties, and each and every person is specifically defined in the code, so that there is a very least chance of the dispute and the ambiguity. And last and important characteristic of this framework is that for the voluntary winding up process or for a voluntary liquidation, the port is coexisting along with the liquidator. Definitely, the independence of liquidator needs to be maintained, but board is continue and is in existence, and it can perform its duties, and the liquidator is also required to consult on the critical matters in relation to the entire closure process. So this is the overall characteristics of the voluntary liquidation framework, which has been introduced in 2000 or effective from to April 2017 and gained the popularity in India. So let's understand a little bit on the statistics. So everybody is acknowledged that this code has given the simplified processes. The process is time bound, and then that's why the companies will adopt the voluntary liquidation under the Insolvency and Bankruptcy Code as one of the preferred option for the closure. So if you see that in the table A, we have shown that how the number of companies who has opted for the voluntary liquidation has gone up from in 2017, which is the initial year or the in which the code is effective, is that 113 companies have filed their voluntary liquidation application. In 2018, the number has gone near approximately 90 to 100%, and 209 companies have filed for the voluntary liquidation. And in 2019, the growth is again the 25%. However, the base of 2018 is quite considerable or substantial. That's why the growth is still the 25%. In the table B, the table A indicates that it is gaining the popularity in India, since it's a relatively new in the overall for the closure of companies. It's a relatively new legislation. The adoption is still slow, but it's still gaining, and we believe that in coming years it will be one of the preferred option for the closure of companies. In the table B, we have shown that how the company has performed, or what is the status of these companies who have been initiated the liquidation. 2017, 113 companies have commenced a voluntary liquidation. However, so far only 4 companies have able to file its final report. In 2009, in 2018, 209 companies have initiated the liquidation. Out of that, 60 companies filed their final reports with the National Company Law Tribunal. And 2019, 257 companies is under liquidation, and 99 companies have filed. So this percentage of the final report is increasing slowly, and average 30% of the companies who have initiated the voluntary liquidation is currently submitted their final report. And this data is available in the public domain from the IBBI website. IBBI have also acknowledged that the liquidation period in initial few years is around 1.6 years in India. So it gives the sense that even though the companies, the legislation has the intention to minimize the overall period, still it is not happening. We can see that we can guess that there are multiple reasons to it, and because of that these things are not moving ahead. That in 2017 it's completely new legislature. Insolvency professionals were not there. They are in the process of registering with the companies, with the insolvency bank board. Then there is no maturity or no clear-cut guidelines or the awareness between the stakeholders, such as the authorized dealer banks, then the governmental authorities. So that's why this is the overall situation. However, if you can see that this percentage is continuously growing, and as per our experience also, this 1.6 year is not the reality in the coming years, and it will definitely boil down or go down to at least 10 to 12 months and not beyond that. So it will be the effective process for the closure of business. So let's go to the next slide, where we have also this information is also captured from the Insolvency and Bankruptcy Board publication. And here it's just a generic information that what are the reasons for the closure. So we identified that out of 100%, 63 companies have shown that the companies are non-operational, and that's why they wanted to close down the entities. It means that it's a pile-up which has happened in the previous year is now getting resolved, and the companies are opting for this option. So that we can assume that the people were not preferred, or earlier people not used to go for the voluntary liquidation because it used to take 4 to 5 years to close down the entity. However, after introduction of the code, this process with the more understanding, now the companies have opted for the closure of non-operational companies under the voluntary winding up instead of the fast track exit. Then 13% are saying that they are the businesses are not commercially viable, or the other, if you see the reasons, that most of the reasons are related to revenue and the business opportunity. So it means that near about 40% people are saying that their business is not good, they're not doing good in India, and that's why they wanted to close down in India. So this is again the generic observation, and which will give you the perspective that why companies are not going for the. So let's get into the applicability of voluntary liquidation. To whom or which company, which sort of entities can go for this voluntary liquidation under the code. First is the companies which has been incorporated under the Companies Act, definitely 2016, 2013 and 1956 Act. Then limited liability partnership firms incorporated under limited liability partnership, and any other person incorporated with the limited liability. So these are the 3 type of entities who can opt for voluntary liquidation under the Insolvency and Bankruptcy Code. What are the prerequisites for the initiation of the voluntary winding up? First, that the board needs to approve the intention of the closure of business or under the voluntary liquidation process. Second, the majority of directors need to furnish the declaration of solvency. We just seen in the previous slide, we have discussed that what is the content of declaration of solvency. So it's very important to understand that how the declaration of solvency are, how the directors are inquiring into the business of the company, and then opting for the or after that furnishing the declaration of solvency. Third one is that along with the declaration of solvency, we need to attach 2 years audited financials, so that the directors need to also declaration of solvency also needs to be given verified by an affidavit. So that is the process. Then appointment of insolvency professional. Then shareholders approval is also required for the special resolution, and only the process will initiate. And the next prerequisite of initiation of the winding up is the creditor's approval, if there is any creditors as on date of the shareholders approval. So this is the broad prerequisite for then all this activity company need to be performed or with their consultant or with their internal staff. So this is the basic prerequisite for the initiation of winding up. In next slide, in detail, we will discuss the entire process of the voluntary liquidation process. As we discussed in the previous slide, that board needs to hold their meeting and needs to approve their objective or their intent of the closure of the company, and also authorized majority of the board member for furnishing the declaration of solvency. Once declaration of solvency is furnished or prepared, within 4 weeks from the last date of declaration of solvency, we need to hold the shareholders meeting to pass the special resolution approving the decision of the board, and also in the same meeting to appoint the liquidator and finalize his terms of remuneration and the roles and responsibility. Definitely it needs to be under the purview and the guidance of the Insolvency and Bankruptcy Code, but the appointment will happen. In general, when the shareholder approve the special resolution, so I'll just clarify, the special resolution means that more than 75% of the shareholders is approving the decision or approving the decision of the board, and they are also agreeing to initiate the voluntary liquidation under the Insolvency and Bankruptcy Code. This date is the very critical date, and it is called the liquidation commencement date. And for all the calculation and for all the timelines, this date, liquidation commencement date, is very important. So once the liquidation is initiated, as we discussed, that board is still continuing. However, the entire control and the management of the affairs of the company is now moved and shift to in the hands of the liquidator. So from the liquidation commencement date, the role of the liquidator has initiated. First and important thing which he need to perform immediately within 5 days from the liquidation commencement, that he need to issue a public announcement in two different language newspapers and on IBBI site. So this public announcement is generally a public announcement is given for the two objective. That first is to announce that company has initiated the voluntary liquidation, and the second objective of this public announcement is that company or the stakeholder or any person who has the claim against the company, they need to submit their claims within 30 days from the date of publication. So this is the importance of the public announcement. It's a declaration or the issue so that everybody is aware that the process is initiated and they can submit their claims. Next, within 7 days from the liquidation commencement date, liquidator also need to notify the registrar and the company Register of Companies and Insolvency and Bankruptcy Board of India about the initiation of the liquidation. The next act he need to do that within 30 days, he need to inform income tax authorities about the initiation of the voluntary liquidation under 178 of the Income Tax Act. So under Income Tax Act, it says that when you decide to discontinue the business, that time also you need to inform income tax authorities. And the second level, when one is initiating the liquidation, that time also it's obligation of the liquidator to intimate the income tax office with specific notification by sending the special notice for initiation of the liquidation. So this is the overall process, so that in the first instance public announcement, everybody is aware that now the process is initiated, and specifically for the income tax authority, which is the revenue authority, not to have any loss to the government authority, is also obligatory on the liquidator side to intimate income tax department about the initiation. After that, within 30 days, it will receive the claims from the stakeholders in the specific formats prescribed under the voluntary liquidation process regulations. So in the specific format, all the claimant or the stakeholder need to submit their claims. Post that, the liquidator need to prepare their preliminary report, which is again the time-bound process, that within 45 days from the liquidation commencement, that they need to prepare the preliminary report, which basically indicate that what is the when liquidation initiated, what was the overall position of the company, what it received from the company, what are the assets, what are the liability it has received, what are the claims it has received after the public announcement. So all these things needs to be mentioned in the preliminary report, which liquidator need to also submit to the company or the board or the stakeholders and the Insolvency and Bankruptcy Board of India. Post that, he need to verify the claims and the preparation, and he need to prepare the list of the stakeholders. While verification of the claims, he can definitely consult the claims received with the board, because board and the management is running the company before initiation of the liquidation, so they are in the better position to give any further guidance. However, the liquidator can keep his verification independent. However, he can consult with them and make the final decision as per his belief and the documentation available or submitted to him. This is the process, and during this process also, liquidator is realizing the assets of the company in the most beneficial manner, and also distribute and also if there are any claims received which are genuine and which needs to be payable, those claims are paid to the stakeholders. Once this entire process is complete, that there is no assets there is no assets and there is no claims from the stakeholders, then the liquidator can prepare the final liquidation proceeding, can repatriate the liquidation proceeding to its stakeholder. It means the shareholders, because whatever will remain in the voluntary liquidation, whatever will remain, it will go to the stakeholders or the shareholders after satisfaction of the claims it has received. once the affairs of the company is completely wound up, now the liquidator is required to perform the liquidation audit by appointing third-party CPA firm. It needs to be an independent firm who will perform the audit of the receipt and payment account of the liquidation bank account which liquidator has opened, and he will submit his report to the liquidator. Along with the liquidation audit report, liquidator will submit his final report to the registrar of companies and IBBI. Final report definitely mention that how he has performed his duties, what he has realized, what he has distributed, what liquidation expenses he has made, and all that details are needs to be mentioned in the final report, and how much money he has repatriated or paid off to the stakeholder. So this is the overall process. Filing after that it files its petition to the National Company Law Tribunal, and National Company Law Tribunal will look into the petition, understand whether there is a whether the liquidator has followed the due process of the law, and based on it finally pass an order of the dissolution. So this is the complete process of the liquidation. So next, go to the next slide, where we have specifically mentioned the role of the liquidator. Role of the liquidator, as we discussed, that he need to issue the public announcement, he need to intimate to the different government authorities, he need to carry on the business of the company for the beneficial liquidation of the company if the company is in ongoing legal entity. Then he can also engage the professional to assist himself to close or discharge his duties. He can realization of the sale and distributor of the assets. He can invite and collect and verify the claims of the stakeholders. He also need to identify, based on the last 2 years of transaction, he need to also understand and form his opinion whether there is any preferential or undervalued transaction has been performed by the companies. Time to time he need to consult with the stakeholders so that the liquidation is continuous and smooth, and there should not be any confusion between the stakeholder, because the intent of the legislation is completely different in the voluntary winding up. Then he also need to form the liquidation estate, which we have just seen that after the liquidation estate he need to repatriate the funds and discharge the liabilities if there is any claims. Then as a process he need to prepare various reports, registers and the books of accounts. And again he need to see that how the interest of the company and the stakeholders is maximized. So that is the whole objective of the entire liquidation process. So authorities which are come into play during the voluntary liquidation is National Company Law Tribunal. It's adjudicating authority, and it passes the final order for the dissolution. Liquidator, it's a licensed professional who is registered with the Insolvency and Bankruptcy Board of India. Other professional who can be appointed for the accounting compliances and the resolving any other matters during the process of liquidation. Valuer, to appoint for the valuation of the assets of the company. And statutory other authority, which involves Register of Company, Insolvency and Bankruptcy Board, Income Tax, RBI, GST authority. So all these authorities are generally involved, and a liquidator is required to deal with all these authorities. So we have discussed now on the regulatory process of the liquidation. Now I want to just discuss the important aspect of the winding down of the company. So running the regulatory process is the one aspect, and the winding down of the company is completely different aspect, which requires which has a lot of critical and important considerations. And according to us, it's one of the most critical stage in the process of the liquidation. So our suggestion is that we should not start the formal liquidation process without winding down of the business activities. So when we say the winding down activities, it involves, we bucketed into the three main broad criteria. One is the business operations, finance, and the human resource and the administration related activities. So let's take one by one business operations. So business operation, it may come the tenancy and other contractual obligation which company needs to fulfill or entered into, and now since it's closing down, how to meet those obligations. So it's important. We have seen that there are lock-in periods in the tenancy agreements, or there are different type of contractual obligations with the service provider. So all these have the negative implications on the company. So it's important to take the stock of this all these critical aspects. Then the vendor and the suppliers. So again it's a contractual liabilities, and one need to assess that what would be the implications and the implication if we terminate these contracts immediately without giving the proper review of these contracts. Then disposal of assets and the tax implications. It is again the critical aspect. Definitely in context of India, there are no specific vendor who are ready to, or there are no specific agency who are purchasing this distress assets. And one need to see that whether really there is any possibility of realization of assets. So something like that. Office improvements, it's completely, even though you have spent a lot of money in that, nobody is ready to pay for, or the landlord is not ready to give you the compensate for this office improvement related thing. Then the companies are required to take multiple registration to operate businesses in India, so it needs to be surrendered beforehand. There are multiple assessments and litigation currently going on or the open for the company, so those needs to be understood and see that what would be the impact from the cash outflow perspective. Insurance policies needs to be surrendered, and also needs to be understood that whether while surrendering the policies, whether there is any possibility to get any unused premium from the insurance company. Recently we have seen in one of the cases that insurance company has actually paid the premium which they have collected from the company for unutilized period. So these can definitely add the cash flows of the company. Then from the finance perspective, and it's one of the very important segment, is that cleaning up of the accounts and the understanding its tax implication. Cleaning up it means that writing off of the payables and the writing off of the receivables. When we are writing off of the payables, it's straightforward going to and assumed as it treated as the income of the company, and if the amounts are large, we need to, companies end up paying the taxes on that. So all these implications needs to be understood and thoroughly examined before we initiate any action. Further, in context of India, exchange control regulations are very critical, and any receivable or payable, in case the company wants to write off or write back specific to the import or export of goods and the software, they need to take the specific permission from the Reserve Bank of India for doing so. And again, it's not only about the permission. Again, as a mandatory rule that every exporting and importing company, they need to inform authorized dealer bank about their import and export transactions, specifically in relation to the import and export of goods, so that there is a specific database which bank is mentioning, which is called IDPMS or EDPMS, which records all the foreign transactions. So in case you're writing off of the receivables and payables, then you need to also ensure that all these entries with the your bank is also knocked off. Otherwise these entries can be open, and in future there could be scrutiny on these aspects. Companies should continue with their ongoing compliances so that the risk and the liabilities can be restricted. The ownership documents are very important in terms of foreign shareholdings, because while repatriating the funds, we need to furnish authorized dealer bank the ownership documents, which specifically the submission with the Register of Companies, submission with the Reserve Bank of India, and the unique identification number which Reserve Bank of India gives for every allotment or transfer of shares. So this is very critical from the foreign ownership perspective. Then open tax demands needs to be addressed. One also needs to see that what is the ultimate cash shortfall, or whether there is a cash shortfall or surplus, because based on this shortfall or surplus, director need to give their declaration. So it's also one of the important things. And repatriation of amount and the overall tax implication in the hands of receiver or in the hands of companies. So all these things needs to be understood and give the proper consideration from the finance perspective. Human resource and admin, coming to the human resource related aspects. In India, workforce is divided into two categories. First is workman, and the second one is the non-workman category. Workman category, the definition under industrial regulations is wide enough, and it can include each and every employee of the company, unless it's specifically doing the managerial work. So it's very important to understand these regulations while dealing with the separation of employees from the company. It also needs to, we need to give the specific compensation packages which is prescribed under the law. So this exercise is very important, and again, while doing so, the documentation for the non-confidentiality, for non-disclosure of any confidential information of the company, and obtaining no dues certificate would be helpful for defeating the future claims in case from any employees. Then apart from that, other administrative things, that historical data and documents would be required during the process. Original certificate for the registrations and licenses would be required for the surrender. There are a lot of things in India, a lot of things are online, so everywhere all filings are getting online through the specific portals, and for that, for getting entered into that login credential and password are very important from the management perspective. And the next one is the active bank account and the KYC, because we have seen that KYC is one of the area where we need to spend a lot of time to regularize the account or activate the bank account. So while winding down is the one of the critical stage, we should restrict the overall its impact in a proper fashion if we adhere to the proper process. So according to us, that one need to understand before we initiate the winding up, one need to understand what are the facts of the company, or perform a quick due diligence on the history or the compliances of the company and the financials of the company. Then prepare a strategy for the closure of the operation, and also understand any bottlenecks. Based on the strategy and the bottlenecks, one need to prepare the proper roadmap for the entire closure, and then only after that one can initiate the liquidation winding up for the company. So according to us, winding down is the most critical stage in entire process of the liquidation. So moving to the next slide, that that what are the challenges we have so far faced while performing or while undertaking the liquidation of companies. That first is that board is reluctant to give to appoint liquidator as an authorized signatory in the liquidation bank account. However, it's a mandatory that to open the bank account, and only the liquidator needs to be a authorized signatory. So there, where the funds are maximum funds are lying there, the board is little bit conservative and not comfortable to hand over its control to the liquidator. Then for the last couple of years, since it's a new legislation, banks are not aware about the provisions. So appointment of the liquidator and making him the authorized signatory would sometimes become difficult, and documentation requirement is quite high. Litigation assessment at any one point of time, if it's an active company, there are a lot of litigations and assessments are still open, and many times it happens that government authority is not submitting their claims on a timely manner. Cleaning up of the financials, which includes the cleaning up of the old payables, resizing, uh, uh, resizing, realization of the assets and the recoverables, and if it requires the approval from any government specific authorities, then it creates a lot of issues and delay the overall process. Non-availability or an incomplete historical accounting and compliance data is also one of the challenge which delay the process. And that's why we believe that to overcome these challenges, companies should, before they initiate the process, one should decide on whether they can appoint a dedicated project manager for the process or the winding up project. The project manager can be in-house or external project management. However, specific focus needs to be done, or specific attention needs to be done on this project, so that the things can move in the right direction with the right speed. The second important is that the emphasis on the pre-winding up activity. We have seen that there are a lot of areas one need to close before they actually get into the liquidation. So we need to ensure that we should give more emphasis on the pre-winding up activity, and also preempt the bottlenecks, so that we can close down the company in the most smoothly and the most efficient manner. So this is that's it from my side. From the overall perspective, we have presented a couple of case studies where we have worked on this liquidation part. So company is a trading company, US based, a subsidiary of the US based company, and they were in the stockbroking trading, and they incorporated the company, and after that their plan had changed. So we have helped them in all the closure related activities, and also repatriation of the funds, which amounts to near about 35 million to the shareholders after the complete winding down of the operations. Then we also undertake the surrender of the registrations and registration and the licenses. And company is dissolved with the help of the NCLT. So this is the case study. The second case study on the Singaporean subsidiary in the real estate industry. Again, it's a subsidiary was in the business of the real estate in the service segment. We have been appointed as a project manager for this company, and to close the entire activity from pre-winding up activities to closing down the company under the liquidation. During this process, we have also obtained the no objection certificate from the income tax department. We also during the diligence phase, we understand there are inadvertent failure of compliances. So we have also performed, or we have regularized those non-compliances or non-compliances, so that we can properly close down the company. We have also advised company on the exchange control regulation, not so that there would not be any tax or negative implications from the tax perspective on the payables which they are payable to the parent entity. So in this project we have handled the complete company secretarial thing, accounting, appointment of the liquidator, and the entire coordination from start to end. So this is the another case study. And the third one is it's a liquidation of the Japanese operating company in the plastic products and molds. So this company was actually an operational company having the employees. So we also manage this project from start to end. We have been appointed as a project manager from starting from the separation of the employee, devising the strategy for the separation for the employees, designing the compensation package for the employees. There are several assets which needs to be disposed of. So we have advised client on the disposal and its implication on the company and the employees in case the assets has been transferred to employees. And there are other many consideration where we have worked on or given our guidance and prepare the proper project plan along with the timelines. And within period of 6 months, we have wind down the entire operation of the company along with the repatriation of funds to the stakeholders. And now we are in the final stage of submission of the final report to the liquidator. That's it from my side, and now I'm open for the any question you may have.
Thank you for the presentation, Ajay. We now invite all our listeners to type your questions in the chat box in the webinar control panel for Ajay to answer. We shall take up some of the questions. We have limited time. The rest, we shall email the responses to you. Thank you. All right, we have a couple of questions that have come in, Ajay. I'll just take them one by one. First, a very basic question for you. One of the listeners in the room wants to know what is actually the full form of VWU and NCLT. So can you just help them with what that means? I think this was on slide number 4 when you were talking.
Yeah. VWU means voluntary winding up. So we interchangeably used against voluntary liquidation. So we also use the voluntary winding up in our day-to-day interactions. And the NCLT means National Company Law Tribunal, which is the adjudicating authority. It's similar to the court who finally pass the dissolution order after submission of the application to the National Company Law Tribunal.
Thank you.
Yes, Jugal, I'm done.
Thanks. Ajay, a couple of other questions. In respect of branch, is the closure under the Companies Act the last step, or is it under FEMA?
So for closure of branch, as you are aware that any establishments in India in the form of representative office also needs to be registered with Register of India. So first, when we are incorporating the branch office, we need to take first the permission of Reserve Bank of India, and then we need to go ahead and apply to the Register of Company for registering. However, while closing the branch office in India, first we need to take the no objection certificate or no objection certificate from the register of company. And once we have that certificate from the register of company, we need to apply to the Reserve Bank of India. So it's a twofold process in case of closure of branch office. First, approval from the, it's a not approval, but it's a no due or no objection certificate from the clearance certificate from the register of company, and then we need to apply to the authorized dealer bank for the closure of branch office.
Thank you for your comments, Ajay. We have one more question. It says, when there is a TP in place, how would you deal with it during a voluntary liquidation?
TP in place in the sense? I'm not sure on that front.
I actually what TP means. Patrick, if you can just tell us what TP means, if you can just spell that out for us, so Ajay can answer that question for you. I'll move to the next question, Ajay, to the time Patrick responds.
Yeah.
All right. Patrick says that TP is transfer pricing agreement. So the question to you would be, if there is a transfer pricing agreement that is in play, then how would you deal with it during a voluntary liquidation?
So again, I'm not very clear on the question. I assume that the question is from either from the termination of the contract or something like that. So when we are going ahead with the voluntary winding up process, and there is a transfer pricing agreement with any related party is in existence, first we need to terminate that contract between the parties and then initiate the process, because any obligation under any contractual liability needs to be fulfilled under the voluntary winding up. And that's why it's very critical to terminate or conclude the contract amicably between the parties. So transfer pricing is generally applicable for any related party transactions or related party transactions. So it would be helpful to close down these type of contracts beforehand, so that we can move smoothly or quickly to the winding up.
Thank you, Ajay. Patrick, I hope that gives you some sort of an answer. You can always reach out to us separately for a detailed discussion on this. Ajay, we have one more question. What is the process to get a creditor's approval?
Yes, so in my presentation, we have mentioned that if there are any creditors, so as per the Insolvency and Bankruptcy Code, we would require the approval from 2/3 of value of the creditors, and they need to give their approval for the closure of company under the voluntary liquidation scheme. So they need to give it in the specific forms, and we need to reach out to them. So that's why while dealing with these situations, we generally advise our client either to pay off all the liabilities before you initiate the process, or we need to, in advance, we need to reach out to the creditors if those are traceable and can be we can reach out to them, and we need to inform them in advance and arrange for this, because this within 7 days from the shareholders approval, we need to have this approval from the creditors. Otherwise, if we didn't get any approval from the creditors, if there are creditors, then we cannot formally initiate the process even after the approval from the shareholders. So after approval from the shareholders, if there are any creditors, then we need to take their consent within next 7 days, and only after the process of the liquidation would initiate.
Thank you, Ajay. We have a couple of more questions. I'm sorry, I know we've gone over time. Just quickly answer these ones. Ajay, one question is for an Indian company branch in a foreign country, will this be affected by the closure of the company in India, since the branch will be governed by the law of the foreign land? Do you have any views on this?
We have means not dealt with the similar type of situation. However, when we are supporting to our international counterparts, we have seen that, like in Singapore, that if there is any foreign branch is there, that unless that branch is closed down, you are not allowed to liquidate the company in Singapore. So similar type of similar type of position one can take in India as well, because if any liability is coming because of the branch or any assets is sitting in the branch, it's important, or it's a responsibility of the liquidator to liquidate the branch and repatriate the funds to India for its better utilization.
Thank you, Ajay. I'll take up one last question and then we can sign off. The question is filing of AOC 4 and MGT 7 under the Companies Act applicable on company under voluntary liquidation?
AOC 4 and
MGT 7.
Yes, it's applicable, and one need to file that.
All right. Well, thank you.
Definitely, we can discuss this on the in detail, that in how it needs to be filed. But yes, it needs to be filed.
All right, thank you. So we will pick that up separately with the person who was asked that question. All right, thank you very much, Ajay, for taking out the time to share your valuable insights with all our listeners. We hope that the thoughts shared by you have been useful for everyone that's joined this session. We once again thank you for joining in. We sincerely hope that you and your families are healthy and stay safe. Please stay tuned in for our next webinar, and we look forward to having you with us once again. Thank you very much and goodbye.